I shot you a note, and I recall saying I want to see 40% growth online, and bang, we got 41% growth online, because to be competitive with Walmart and Amazon, they need that. But the whole report was just fabulous. I remember I used to come on here in 2006 and say Target is the best retailer in the country. From then till now, I've been saying Costco pretty much is the best retailer in the country. But Target today looked like they used to look. Better numbers in the store, great numbers online. They didn't blow up the earnings statement to get there. I mean, this was just as good as it gets as far as reporting in that space.
So what happened?
What happened was the consumer couldn't be better. You heard Brian say the best consumer in his career. I've been saying the best consumer in 25 years. When Walmart can report fabulous numbers, and Target can report fabulous numbers, and Amazon can report fabulous numbers, it's not just what the retailers are doing, it's what the consumer's doing. So I give him all kinds of credit. He's done a great job with Retail 101, and they've invested all this money, and it's working. But a lot of this that we're seeing this week has been the consumer.
Sure. Roxanne, Brian said that he is stealing market share from other places, obviously not from Walmart or from Amazon, because as Jan pointed out, they're doing great. Are you seeing places in your world that you think they are stealing from?
You know, I guess it's we'll still have to wait and find out. Specialties in pretty early innings. What we have seen so far are the bellwethers that have been doing well, like a TJX, also taking share. I mean, Marmax was up 7%. I mean, that is a big number for a $40 billion company. Mm-hmm. I'd imagine we might see some weakness among some of the specialty names that have yet to report. And what it means when you've got a positive, favorable macro, but a few that are weak, it really comes down to have and have-nots. You know, who's executing and who's not. So
in an environment, though, where the consumer is so strong, and Brian had mentioned this in the interview that you had with him before, I mean, does it tell you that these guys just don't have the right product? I mean, if the money is there and the money is being spent, why aren't they spending it on whatever it is at Abercrombie or whatever retailer you're talking about here?
Yeah, no, I think it's all about execution and self-inflicted issues. So look at a name like L Brands, which has been reporting monthly comps.
That's grim.
I mean, Victoria's Secret is still comping negative with negative traffic. So it's really...
what have you written, Roxanne? I don't put. I think you wrote that they're selling stuff nobody wants at a price nobody wants to pay. That's not a good combination.
It's not a good combination. I mean, and it still continues to be highly promotional as we head into the core of back to school. You know, for the bras, and even in the pink category, it's been a little bit softer than it should be. So I think the have-nots are really going to stand out in this environment, particularly given the strength of the consumer.
But L Brands is a unique position because they're just doing something wrong. Most of the retailers that are struggling are not maximum taxpayers, so they don't get the break on taxes, and they're over-leveraged, so they can't afford to reinvest in the business to get all these online sales.
What are you talking about specifically?
Pennies is a good example, right? But anybody like that in the space that's giving up share, you know, I keep saying we're going to see record store closings and record bankruptcies this year of retailers. Those are mostly highly levered retailers who don't pay taxes and therefore can't reinvest in the business, and they're giving up share to the Targets and the Urban Outfitters of the world, the Lululemons of the world. But that doesn't apply to these weak retailers. They're still going to go broke, and they're going to go away, and they're giving up share to the TJ Maxxes of the world.